real estate investors are bleeding money left and right in the Canadian housing market.
This follows numbers from Vancouver and Calgary, where sales in all three cities are slumping and bidding wars seem to be a thing of the past.
Canada's housing market, condos are the weakest link. The steepest drop in sales and prices have been in Toronto. The trends in Vancouver are troubling too.
But the people who did profit from this artificially inflated market are now sitting online, blaming everyone except themselves, even though they're the one who rode this real estate boom to all the way up. I've been following real estate trends since the pandemic. In today's video, I will explain how Canada's housing market is being controlled, not by average buyers, but by real estate agents, mortgage brokers, and investors. Canadian housing market is driven by 3 C words: capital gain, commission, and cash flow. And that combination is exactly what's dooming it. So first one we have on the list is real estate agents. In the finance world, there's a common saying: never take expert advice from a salesperson, especially when their paychecks depends on the sale. The same logic applies in real estate agents. These agents will confidently pitch you micro-sized condos as a great investment until you realize they're not. So let me be clear. This video is not meant to defame anyone. It's meant to educate and raise awareness. So the premise of this video is not to target anybody. Let's take some examples from the real estate industry. So meet Agent Kelly.
I'm not Agent Kelly. I'm making moves.
During the real estate boom, he was overly optimistic about the market. Let's hear some of his predictions back then.
In my opinion, pre-sale condos are probably the best and safest investment that we currently have.
The condo market continues to be struggling. Condos, however, now that would have previously turned around quickly are simply not moving. Condo sales in the Greater Toronto Area dropped by 23.5% in March. That's according to the Toronto Regional Real Estate Board.
One of my clients made $120,000 in 3 months on a pre-sale that we flipped. It was a 2-bed, 2-bath, top floor unit, corner unit in Langley. We got in there first, picked the quality in the building, bought it. 3 months later, we flipped it for $700,000. We bought it for $580,000.
Markets are continuing to drop to lows not seen in decades. It has some condo owners looking to offload their properties, worried that things will only get worse.
Now fast forward to 2025, after the market got a reality check. His content has taken a 180. Today he posts videos titled "Why People Are Leaving Canada, Canada is Dead," and even a video about immigration in 2025, where he quoted this bizarre fake article.
1,000 new immigrants just the first 4 months of 2025. So there's a lot of discussion that we were going to have, a slower rate of immigration. People were even saying that immigration was going to go negative over the next couple of years. My stance on it was, I will believe it when I see it.
This is the same guy, just a couple years ago, was selling properties targeting especially immigrants. The crazy part, he even spoke Punjabi in his videos.
Ki hala Paji, Karlanava, Merko Hagava, 10-bed the upstairs, 2-bed the basement. Ajo. Bedroom, char washroom, 3,000 square feet. Let's check it out.
To specifically target that audience. And you can find many of his videos, especially targeting investors, where he pitches his properties to the investors.
Safest purchase you can make as an investor in real estate right now is a detached home with a suite in Chilliwack. Very close to cash flow neutral. Detached homes have been beaten down. Cash flow! Rent potential over $4,200 a month. 5,800 square foot corner lot home, zoned for higher density. $849,000. There will be a time when people are excited and interested in real estate investing. I don't know when that's going to be. I don't know what that needs to look like to get people interested in this again, but it's going to happen.
But here's the truth. Money has no ethnicity, no religion, and no language, but it could make people dance. During my research, I came across another realtor who was describing city of Hamilton as if it were a Gotham City.
Downtown Hamilton smells like cat pee. There's needles by the playground, and realtors are still trying to convince you that this place is up and coming. This isn't a comeback story, it's a crisis. And if you've lived here long enough, you don't need a headline to tell you exactly what's happening. I'll even give you the exact seller guide I use with my clients, so in case you want to get out of here, you can do it profitably.
Making it feel like a Detroit and urging people to sell their homes. But here's the thing, for someone to sell, someone else has to buy, and that's the catch.
And you know what's working against you. You've got the equity, but the equity isn't a guarantee. It's a window. And that window, it's closing fast. So here's your move. Step 1, download my free seller's guide. It's not fluff, it's field-tested systems that I've used to help hundreds of homeowners in Hamilton sell faster and for more. Step 2, book a strategy call with me. I'll tell you exactly what your home's worth, what to fix, what to skip, and whether or not you should even be thinking about selling your house right now. And yeah, the call is totally free, no pressure.
Over the past few months, trading in the real estate market has been sluggish. These realtors don't make money when people hold on to their properties. They make money when people buy and sell. So now they shift their tactics with fear-mongering and exaggerated narratives. They're trying to pressure people into selling just to keep the market moving and their commission flowing. Many real estate and mortgage brokers share the same pattern. They made money selling these properties to investors. Now they're blaming governments, immigrants, and everybody else. It is an infinite loophole of contradiction and opportunism. Now let's talk about mortgage brokers. When it comes to the mortgage brokers, there are many of the first home buyers realize that you are the product. These brokers don't lend money themselves. Instead, they act as a middleman between you and lenders, whether that's a big bank or private loan provider. Their job is to sell your financial profile to the highest bidder, and they get a commission called the finder fee for every deal they close. So while they may seem like they're working for you, their actual incentive is tied to the lender paying them, not to your financial well-being. And what do you get in return? A 25 to 30-year mortgage commitment of monthly mortgage payments. For most people, that means spending decades paying off a loan that's supposed to represent safety, stability, and success. But here's the truth. So your loan is your liability, but someone's asset. Your debt generates incomes to the lender. In many cases, your mortgage is even bundled with others and sold as an investment. You're financing someone else's profit machine. So if you are the unlucky one who bought during the peak of real estate boom, say in 2021 or 2022, you might now find yourself paying more than your home is worth. As interest rates have risen and market cooled, many recent buyers are stuck with massive monthly payments on properties that may have lost value. And you will also notice a pattern. Many of these so-called experts are quick to criticize boomers, immigrants, and government, but there is one group they rarely, if ever, mention. That is real estate investors. You might be wondering why. Because that's where the big fat commission comes from. First, the investor buys a property, the agent makes a commission. Then the same investor flips the property for profit, the agent earns another commission. It's a cycle of profit over people, where housing is treated like a stock portfolio, not a basic human need. So of course, these agents won't bite the hand that feeds them. They will keep blaming the group that won't impact their paychecks. Because calling out investors means fewer deals, fewer clients, and fewer commission. So now comes to the third part of our video. Real estate investors. So real estate in Canada is just no longer finding a home.
A flash sale offering 25% off move-in ready concrete condos.
My husband was telling me about it, and we're interested in investing, and Surrey's booming at the moment, and I think it's a good place to start.
I'm looking for investment. I have several in this area already.
It is a profit game, and the investors are at the center of it. According to data from Statistics Canada and Housing Research Group, people who own homes that they don't live in now hold between 20% to 30% of all homes in many provinces. In places like Nova Scotia and New Brunswick, the number climbs to over 30%. In major cities, it gets even worse. In Toronto, nearly 40% of homes built were bought by investors. For new condos, that number hits 57%. In Vancouver, investors own almost half of all newly built condos. This is just not a coincidence. Investors are actively pushing the demand up, and with demand comes higher prices. Many of them buy multiple properties, reducing supply for regular people looking to buy their first home. And while average Canadian save for years to afford a mortgage, these investors often use existing equity or access to capital and lock down more units. Then they rent them back at sky-high rates, turning basic shelter into cash flow machine. It is a system designed to reward those who already have money while freezing out first-time home buyers. What's the impact? Tighter supply. With more home held as investments, there are fewer left for people who actually want to live in them. So you're always going to see these people who are so-called expert on these issues. Always going to be real estate investors, real estate agents, mortgage brokers. And they are the one who are making money from this.